something is happening with Shiba Inu that most traders have already missed. While panic spreads across the market, a hidden signal is flashing beneath the surface. The token just bounced 15% from its lowest point in 3 years, but the real story is not the bounce itself, it is what is happening behind the scenes that could define the next month. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The cryptocurrency market entered February 2026 under severe pressure. Bitcoin, the dominant force that dictates sentiment across the entire digital asset space, plunged below $62,000 on February 6, marking its lowest level since the previous autumn. This breakdown triggered a cascade of selling that engulfed altcoins and meme tokens alike, creating one of the most challenging trading environments seen in recent months, according to market data. Trackers, the Fear and Greed Index collapsed to a reading of 12, indicating extreme fear among market participants. When this metric reaches such depressed levels, it typically signals that weak hands have already exited positions and remaining holders are showing resilience despite the pain. Shiba Inu found itself caught in this storm. The token had been declining steadily since early January, losing approximately 34.7% of its value over the previous 30 days according to market analysis reports. The broader macroeconomic environment added fuel to the fire, with tighter Federal Reserve policies and shrinking liquidity creating headwinds for risk assets across the board. Market participants adopted a risk-off approach and meme coins faced disproportionate selling pressure due to their speculative nature. Shiba Inu, being one of the most recognized meme tokens, experienced significant outflows as investors sought safety in larger, more established cryptocurrencies. The sentiment surrounding the token reached levels of pessimism not seen since the depths of the previous bear market cycle. On February 6, 2026, Shiba Inu experienced a dramatic intraday reversal that caught many market participants off guard. After touching a session low of approximately 511 units, representing its weakest level since July 2021, the token staged a remarkable recovery. According to historical data sources, Shiba Inu bounced back to trade near 585 units by the end of the session, registering a gain of approximately 3.91% for the day despite the broader market chaos. This 15% recovery from the session lows occurred while Bitcoin remained under severe pressure, trading near $62,000 after losing the critical $80,000 support level that many analysts had viewed as the final safety net for the current market cycle. The divergence between Shiba Inu's bounce and Bitcoin's continued weakness suggests underlying dynamics specific to the token. The recovery was not merely a technical bounce. According to market reports, the token demonstrated relative strength during the market-wide selling, maintaining its broader trading range rather than cascading lower in proportion to Bitcoin's decline. This behavior often indicates that selling pressure has become exhausted and accumulation may be occurring at these depressed levels. The timing of this bounce proved particularly significant. It came amid reports of substantial liquidations across the cryptocurrency market, with over $2.59 billion in positions being wiped out in 24 hours according to industry sources. Shiba Inu accounted for $1.07 million of these liquidations, suggesting that leveraged positions had been flushed out, potentially clearing the path for more sustainable price action. The on-chain metrics reveal a complex picture of capital flows during this turbulent period. According to derivatives data platforms, Shiba Inu registered spot outflows of approximately $1.14 million on February 6. While this figure appears modest compared to the token's overall market capitalization, the pattern tells a more important story. These outflows remained contained even as the market entered panic mode, suggesting that holders were not rushing for the exits despite the extreme volatility. Exchange flow data from artificial intelligence market analysis indicates that approximately 207 billion Shiba Inu tokens moved out of exchanges in a single 24-hour period during early February. Such movements typically indicate investors transferring assets to private wallets for long-term holding rather than preparing to sell, which reduces immediate sell pressure on spot markets. The technical structure shows Shiba Inu trading well below all major exponential moving averages. According to charting data sources, the 20-day moving average sits at 711 units, the 50-day at 770 units, the 100-day at 844 units, and the 200-day at 985 units. The current price near 585 units represents a gap of over 60% from the August 2025 highs near 1,550 units. The parabolic SAR indicator sits at 600-83 units, marking the first resistance level for any sustained recovery attempt. The 30-minute chart confirmed a death cross formation according to technical analysis reports, where the 50-period moving average dropped below the 200-period moving average, typically reflecting fading short-term momentum during extended sell-offs. Analysts are interpreting these signals with cautious optimism tempered by realistic assessments of the broader environment. According to Exchange Research Analysis, technical indicators show Shiba Inu in oversold territory with an RSY reading of 29.29, historically a level where bounce attempts often materialize. The stochastic oscillator readings of 8.04 for %, K and 6.43 for %D further confirm extreme oversold conditions that typically see mean reversion attempts. Analyst projections from mid-January 2026, as reported by market research sources, targeted 850 units by the end of January, representing a 25% gain expectation from oversold levels. While this target was not achieved due to the broader market breakdown, the underlying technical rationale remains relevant for February price action. Technical analysis publications note that Shiba Inu formed a rejection candle pattern with a long lower wick on the daily chart indicating aggressive buying interest near local lows. This formation typically emerges when selling pressure begins to fade and demand starts absorbing available supply at discounted price points. The marketing lead for the Shiba Inu ecosystem addressed the community during the downturn, according to community trackers, emphasizing emotional discipline and warning against panic selling. She pointed to commentary from industry figures suggesting the current crypto market cycle is not over, framing the downturn as part of a broader supercycle narrative. However, institutional analysts anticipate Bitcoin could dip to $38,000 according to market reports, which would likely pull Shiba Inu lower regardless of its current relative strength. The short-term outlook for Shiba Inu presents a bifurcated path dependent on Bitcoin's ability to stabilize and broader macroeconomic conditions. According to forecast models, Shiba Inu could reach approximately 642 units by mid-February, with gradual appreciation towards 707 units by early March, representing a 12.25% increase from current levels. The bullish scenario involves Shiba Inu reclaiming the 700 unit level within the next 2 weeks, which would open the path toward testing the 850 unit resistance zone identified by analysts. This recovery would require Bitcoin to hold above $60,000 and ideally bounce back towards $70,000 to restore confidence across altcoin markets. If these conditions materialize, Shiba Inu could target the 900 to 1,000 unit range by late February. The bearish scenario remains equally plausible. Should Bitcoin break below $60,000 and test the $50,000 psychological level, Shiba Inu would likely retest the 511 unit lows and potentially probe the 400 unit zone, representing 2024 accumulation levels. The death cross formation on lower timeframes suggests short-term momentum remains with the sellers, and any recovery attempts could face rejection at the 683 unit parabolic SAR level. The token's fate hinges on 3 critical factors over the next 4 weeks. First, Bitcoin must establish a stable base to prevent further contagion selling. Second, exchange outflows need to continue indicating accumulation rather than distribution. Third, the broader macroeconomic environment must not deteriorate further with additional Federal Reserve hawkishness or geopolitical shocks. Where do you see Shiba Inu price heading by the end of February? Will it reclaim the 700 unit level or test lower supports first? Drop your targets in the comments below and explain your reasoning. The market has spoken, and Shiba Inu holders have shown resilience in the face of extreme fear. Whether this bounce marks the bottom or merely a pause in the downtrend remains to be seen. Stay informed, manage your risk wisely, and remember that opportunities often emerge when sentiment reaches its darkest point. Subscribe for updates.